Happy November, everybody, and we are talking about the top 3 stocks to buy this month. So stay tuned and let's go.
Wolf of Dubai.
Hello everyone and welcome to Wolf of Dubai, your stock investing channel here on YouTube, fastest growing financial YouTube channel from the Middle East, from Dubai to the world. So make sure to subscribe and smash that like button. So we are talking, as it is another month that is coming now to the stock market, November. And as every month or beginning of every month, I am presenting 3 stocks that I would invest or I'm invested in, so make sure to stay tuned till the end. So before starting and going to each new stock for November, I want to do something different this time. So this time I want to go through the 3 stocks and their development that I presented to you last month, and I think it's interesting to see how good the stocks or bad the stocks performed and what I'm thinking moving forwards into this stock. So let's jump right into it. So first stock that I recommended last month on the 4th of October to be precise was Tesla. Tesla was by then $231 and is now a whopping $315. That's an increase of 36.11%, and this came because of huge growth numbers into the profits. Not only the profit that was astonishing, we will come a little bit later to it, but also obviously with a huge surprise into the profit margins of these cars, better than any other car manufacturer out there that I know of. So the second stock that I recommended also on the 4th of October, obviously because it was the same vlog, was Qdian. The Qdian is like a company that brings financing and low credits to consumers to buy things and so on, so short-term things, and they just were at $6.86 per share, and they are now at $6.89. So just a small difference, 1.75% up since my last vlog. And the last one, a very interesting one, because they had a huge dividend yield, and I'm thinking Daimler is one of the best traditional car manufacturer to hold on the electrification scene, and this was Daimler. They were at 43.81 euros and grow 21% within 1 month to 53.10 euros. So if you're looking at this, this is really good. So the tips was actually good, so maybe you should somehow listen to the wolf. But obviously these stocks are a longer time investment. I'm a long-term investor, so I buy a stock and then hold it for a couple of years or months. I'm not the day trader because I'm thinking this is a huge risk, obviously. So either you go for a very short safe haven like the index funding, or you go into value and growth stocks like I am doing, and you can follow it on this channel. So make sure to subscribe and let's go into the stocks that I'm thinking are really interesting coming into this new month. So the first one, I made a whole vlog about it, is AT&T. Okay, they're paying a dividend yield of 5.34%, which is quite interesting already. Revenue growth is in the single digit. In the telecommunication business you cannot grow it, especially in the size of 278 billion market cap, but still they are in the couple of years concentrated on mergers and acquisitions and so on. And now there is an Elliott management company that moved into this company and bought some shares of this company, and try to guide this and make it plus 60% within the next 2 years. So very interesting. They did it also with eBay quite successfully, so I think there's a pretty good chance that they can do it also with AT&T. And this dividend yield, it's still even when they stay flat, it's pretty good for a stock. And the P PS ratio is 1.51 and the PE ratio is 17, so also not so expensive stock overall. So I think it's a nice value buy. I wouldn't buy into the stock if there wouldn't be the fact of the Elliott management, and also the Q3 earnings that they just released was quite positive. So you see already the first positive movements for the company since Elliott management moved inside this stock. So this is definitely a buy for me this month. Let's go to the next one. The next one is IRobot. So IRobot is presenting and developing and selling worldwide robots for your home. So they have like a vacuum cleaner, they have an electronic robot mop, they have now a lawn a cutter. I don't know how is the right word for it, but they are at revenues at this quarter, the last quarter, of 289 million. That's a nicely growth internationally of 25%. So they are still, let's say, considered a growth stock with these numbers. The value of the companies is around 1.38 billion, so it's small cap company in my opinion, and the PS ratio is 1.2, so super cheap considering that, and also PE ratio was 15. And why I'm thinking that especially in this month it could be a good buy is because they just lost since April about 50-60% of the market value, because there's this trade war going on and so on. So there's a little bit scaring part for the stock and the environment overall. But the earnings was not so bad, growth of any of every metrics or most of the metrics, and also they are actually saying that guidance was a little bit lower, but just minimal, and the stock just crashed, and so it's I think it's in this time a good opportunity to stack up a bit of IRobot shares this month. So I believe this is a great one, so make sure to check it out. So let's dive into the next one, and you maybe already know what it is. The next one is the growth opportunity into electric vehicles. It's Tesla, and let's dive straight into the Q3 numbers. So they could, offer a nice whooping 342 profit. Nobody, expected it. Everybody expected a 50 cents loss per share, and actually they came out and with a profit of $1.86 per share, which was ridiculous, really good. And this is mostly was possible throughout they building all this factory in China in no time, and growing and ramping up production and building more and more cars, record after record. And why they are doing it, profit as well as profit margin per car, the gross margin was 22.8%. This is really good. So compared to, for example, Daimler, it's like 17. So you see, this is really good. And of course there's like short sellers voices and negative voices. It's not so sustainable, but I believe this is just the beginning. So that's why we are looking at the value of 56.53 billion as of this recording, and the PS ratio is 2.2. So it got a little bit higher, obviously, because the revenue on the Q3 was a little bit declining, but mostly not because they're selling less cars, they're selling more cars than ever per quarter, but there was a little bit of leasing now, so they don't get the money directly, and so on and so forth. So PE ratio is not available because they are doing not profit at this stage. So you can look into forward PE ratios, but this is not my thing, so I kept it out. So definitely definitely why I am thinking that still in November it's a very, very good pick. I think, you know, long term is a very, very nice pick, Tesla, right? Because I think that this company will grow and in 2020 maybe be around 600, 500, 800, maybe up to $1,000 per share. So huge potential in this company. But also, you know, the earnings was great. They will announce the pickup most probably this month or in December. So there's you know, when the product will come out and everybody will see like this is a really, really revolutionary product, and also a lot of innovations inside this product. Elon Musk said that most probably this is the most futuristic car ever built, you know, super, super good for people that looking for pickups. And of course, China just will start with the production, and you know, next year they will go to up to ramp up the production up to 150,000 additional cars. That's a little bit less than half of the cars that are building every year as of now. So, you know, this is the third stock. I think that these three stocks are tremendous opportunities, and so let me know what you guys think, which stocks I might should look into it. Let me know in the comments. Subscribe, watch all the other videos, and see you tomorrow because I'm vlogging every single day.